Hello everyone, I am Dr. Manoj Kumar NV, working as an Associate Professor in the Department of Management Sciences, Maharaja Institute of Technology, Mysore. So today's topic is commercial banking services. So as we discussed in the previous classes about the remaining around 12 different services which we have discussed, and today we are concentrating towards the rest of 3 services which are online banking, private banking and mobile banking. So the online banking, as you know that online banking, also known as, we call it as internet banking, or we also called it as web banking, is an electronic payment system that enables customers of a bank or other financial institution to conduct a range of financial transactions through the financial institution website. So therefore, through the website we are going to access whatever the financial transaction which we are interested to do it. So the online banking system will typically connect to or be a part of the core banking system operated by a bank, and is in contrast to branch banking, which was the traditional way customers access by banking services. So some of the banks operate as a direct bank, or we call it as virtual bank, where they rely completely on internet banking. So therefore, the online banking, we also called it as online banking. We also called it as web banking. So can call it as internet banking. Also we can use it as virtual banking. These are the different names which we are used to call it as online, banking. So internet banking software provides personal and corporate banking services, offering features such as viewing account balances, obtaining the statements, checking recent transaction, transferring the money between accounts and making a payments. So these are the major transaction which we are concentrating towards online banking. So then how these operation which is take place in the bank. So when we consider the online banking, to access our financial institution online banking facility, a customer with internet access will need to be registered with the institution of the service and set up a password and other credential for the customer verification. The credentials for online banking is normally not the same for telephone or mobile banking. So the financial institutions now routinely allocate customers numbers whether or not customer have indicated an intention to access their online banking facility. So the customers numbers are normally not the same as account number, because the number of customer accounts can be linked to the customer number. So technically the customer number can be linked to any account with a financial institution that the customer controls through the financial institution may limit the range of accounts that may be accessed to. So say check, savings, loan, credit cards and similar accounts, you can able to access it. So the customer visit the financial institution secure website and enters the online banking facility using customer numbers and credential previously setup. So therefore, where they can able to get to know what are all the information they given and whatever the numbers they are given. So based on that, they are going to receive the messages to the particular phone numbers. So each financial institution can determine the types of financial transaction which a customer may transact through online banking, but usually includes obtaining account balances, a list of recent transaction, electronic bill payments, financing loan and fund transfers between the customer or another accounts. Most banks set the limits on the amount may be transacted and other restrictions. The most of the banks also enable customers to download the copies of bank statements which can be printed at the customer premises. So some banks charge a fee for mailing hard copies of bank statements. Some banks enables customers accounting software. The facility may also enable the customers to order a checkbook statements, report losses of credit cards, stop payments on a check, advise change of address and other routine actions they can able to place by sitting at the home itself. So coming to features of online banking, where the online banking facilities typically have many features, capabilities in common, but also have some that are applicable in specific. The common features fall broadly into several categories. The first one is bank customers can perform non-transactional tasks through online banking, including viewing account balances, viewing recent transactions, downloading bank statements. For example, any PDF format they can easily download based on the period which they are anticipated, viewing images of paid checks, ordering checkbooks, download periodic account statements, downloading applications for mobile banking and e-banking, etc. Easily they can able to access as a non-transactional task. Coming to second feature, where the bank customers can transact banking tasks through online banking, including fund transfer between the customer linked accounts, paying third parties including bill payments, third party fund transfers and investment purchase or sale, loan application and transactions such as repayment of enrollments, credit card applications, register utility bills and make a bill payments. These are behalf of the customer, the banker is going to make a payment. Even the individually they can able to do the payments by using the particular online banking services. Then other than that, financial institution administration they can do, and management of multiple users having verifying level of authority, transaction approval process. Some financial institutions offer special internet services like personal financial management support, such as importing data into personal accounting software. Some online banking platforms support like account aggregation to allow the customer to monitor of all their accounts in one place, whether they are with the main bank or with other institutions. So therefore, easily they can access each and every information of the banking transactions. Coming to advantages of online banking. So the first advantage is convenience is a major advantage of online banking. Basic banking transactions such as paying bills and transferring of funds between accounts can easily done within a 24 hours a day, 7 days a week and wherever the consumer wishes. And second one, online banking is fast and most efficient. Funds can be transferred between the accounts almost instantly, especially if the two accounts are held at the same institution or same bank. the consumer can open and close a number of different accounts online, from the fixed deposit to recurring deposit accounts that typically offer higher rates of interest. As we know that always there will be a higher rate for fixed deposit compared to recurring deposit. And the third benefit is consumers can also monitor their regularly closely, and allowing them to keep their account safe. Around the clock access to banking information provides early detection of fraudulent activities, thereby acting as a guardian against financial damage or losses. So therefore, easily we can able to safeguard whatever the information we are rendered to the banker. So coming to the disadvantages for a novice online banking customers using the systems for the first time, maybe present challenges that prevent transaction from the being processed, which is why some consumers prefer face-to-face transaction rather than online. Online banking does not help if a consumer need access to a large amount of cash. So therefore, there is a stipulated or specified amount restriction. So therefore, up to certain amount only the bankers are permitted to withdraw the amount or transferring the amount through online. And the third one is, although online banking security is continually improving, such accounts are still vulnerable when it comes to hacking. So therefore, the consumers are very careful regarding to whatever the information like a password, account number, IFSC code, they must need to be keep it at safe, otherwise it is going to be misused. And additionally, online banking is dependent on the reliable internet. If the proper internet facility is not there, it's not efficient, obviously the transaction which is not going to be completed. So therefore, it will leads to confusion rather than completing the particular transactions. Then coming to the second services, that is private banking. So private banking consists of personalized financial services and products offered to the high net worth individuals. So high net worth individual means where they are going to be keep more properties pledged, or they kept the result, they make a more investment, or they keep the more deposits in the particular banks. So clients of a retail bank or other financial institution. It includes a wide range of wealth management services, and all provided under the one roof. So therefore, the services including like investment and portfolio management, tax services, insurance and trust, as well as they are concentrating on estate planning. So while private banking is aimed at an exclusive clientele, consumers, banks and brokerages of every size offer it. This offering is usually through special departments dubbed private banking or wealth management divisions. So private banking is an enhanced offering for the high net worth individual, HNWI, high net worth individual clients of a financial institution. So private banking consists of personalized financial and investment services. So therefore, here in private banking, they mainly focus on two things. One is financial plans, and the second one is where they are going to be concentrating on investment services and products from a detected personal banker. So therefore, based on the wish of the individual consumer, the banker is going to be performed the financial plan and investment products and services they are going to be explained to them towards make a right kind of investment. Private banking clients typically receives discounts and preferential pricing on financial products. However, the range of the products and investment expertise offered by a private bank may be limited compared to other other bankers. These private banking includes common financial services like checking and saving account with a more personalized approach. A relationship manager, or we call it as private banker, is assigned to each consumer to handle all the matters. So the private banker handles everything from involved tasks like arranging a jumbo mortgage to mundane like paying up bills. However, private banking goes beyond certificate of deposits and safe deposit boxes to address a client's entire financial situation. So, specialized service includes investment strategy and financial planning advice, portfolio management, customized financing options, and retirement planning, and passing wealth on to future generations. So therefore, they can able to plan where to invest and how much they need to be invest to make secure themselves and to make more profitability. If you focus into the advantage of the private banking, then the private banking offers clients a variety of perks, privileges and personalized service which has become an increasingly priced commodity in an automated, digitalized banking world. However, there are advantages to both the private bank clients as well as bank themselves. The first one is privacy. So, privacy is the primary benefit of the private banking. Customers' dealings and services provided typically remains anonymous. Private banks often provide HNWI, high net worth wealth individuals, with tailored proprietary solutions which are kept confidential to prevent competitors from luring prominent customers with a similar solution. Then preferential pricing, this is also one of the most important in private banking. So private banking clients typically receive a discounted or preferential pricing on products or services. For example, they may receive special terms of prime interest rates on mortgages, specialized loans or line of credit. Their savings or money market accounts might generate higher interest rates and be free of fees and overdraft charges. Also, the consumers who operate imports and export ventures or do businesses overseas might receive more favorable foreign exchange rates on their transaction. So therefore, this will be helpful to them to do the forex as well as cross-border transactions. So then coming to the third one, where alternative investment. So therefore, it is provide a chance to the managing clients of investment. Private banks often provide the client with the extensive resources and opportunities not available to the average retail investor. So for example, for a HNWI, high net worth individuals may give access to an exclusive hedge fund or a private equity partnership or some other alternative investment. Coming to the fourth advantage, it's a one-stop shop. So in addition to the customized product, there is the convenience of consolidated services, everything under the one financial roof. Private banking clients received enhanced services from their private bankers that act as a liaison with all other departments within a bank to ensure that the clients receive the best possible product offering and services. Then coming to the sixth one, assets and fees for banks. So the banks or brokerage firms benefit from the having clients' funds add to their overall assets under management. So we call it as asset under management, AUM. Even at discount rates, the private banks management fees for portfolio management and interest on loans underwritten can be substantial. In an environment where interest rates in the US have remained low, banks have been unable to charge higher loan rates to grow their profits. As a result, fee income has become an increasingly important financial metric in helping banks to diversify their revenue stream. Banks have made strides in expanding beyond traditional banking solutions or the products and services such as loan and deposit to more service like oriented and fees based offering like private banking. Coming to the pros and cons of private banking, the pros are one-stop shopping of all financial affairs and it's a concierge services and dedicated employees, and they have a favorable rates and discount charges they are going to be applied, and perks and privileges are very high in private banking. Coming to the cons, where they have a less institutional expertise, options are limited to proprietary products and high staff turnover and possible to have a conflict of interest for employees. Coming to the disadvantages, where the first disadvantage is bank employee turnover. So employee turnover rates of banks tend to be high. Even the elite private banking divisions, there may also be some concern or conflict of interest and loyalty. The private bankers is compensated by the financial institutions, not the client, in contrast to an independent money managers. The second disadvantage is limited product offering. So means only that they are ready to provide the very limited and specified products and services in the private banking. Then coming to the third one, where regulatory constraints of banks. So lucrative as a private banking it can pose challenges for the institution as well as private banks have dealt with the restrictive regulatory environment since the global financial crisis, which is reported in the year 2008, the Dodd-Frank Wall Street Reform and Consumer Protection Act, along with the other legislation passed in the US and around the world to mitigate the financial crisis in the banks. So therefore, there will be a chance of the constraints for private banking. Then we are moving to the last one, where we are focusing on mobile banking. So mobile banking is an act of making financial transaction using mobile devices like cell phone, tablets and all. So the activity can be as simple as a bank sending fraud or usage activity to the client's cell phone, or as complex as a client's bills, paying bills or sending money abroad. Advantages to mobile banking includes the ability to bank anywhere and at any time. The main disadvantage includes security concern and a limited range of capabilities when compared to the banking in person or on a computer. Mobile banking is a very convenient in today's digital age, with many banks offering impressive apps, the ability to deposit a check, to pay for merchandise, to transfer money to a friend, or to find any an ATM instantly are the reason why people choose to use the mobile banking. However, establishing a secure connection before logging into a mobile banking app is most important, or else a client might risk personal information and being compromised. So mobile banking and cyber security, as we know that bankers are ready to spend a lot of amount on cyber security. So therefore, the cyber security has become increasingly important in many mobile banking operations. Cyber security encompasses a wide range of measures taken to keep electronic information private and avoid damages or theft. It is also used to make data is not misused, extending from personal information to complex government systems. So the three main cyber attacks can occur. Those are like backdoor attacks, in which thieves exploit alternative methods of accessing a system that does not require the usual means of authentication. Some systems have backdoors by design, other result from an error. The second one is denial of service attack, where prevent the rightful user from accessing the system. For example, thieves might enter a wrong password enough times that an account is blocked or locked. And the third one is the direct access attack, includes bugs and viruses which gain access to a system and copy its information, and or they can able to modify it. Step financial advisors can take to protect their clients against cyber attacks includes helping and educating the clients about the importance of strong and unique password, that is like example, not reusing the same one for every password protected site, along with how a password manager like Vault or LastPass can add an extra layer of securities, never accessing the client data from a public location, and being sure the connection is always private and secure. And mobile banking remittances. So remittances are funds that can expedite sent to their country of origin via wire, mail or mobile banking or online transfer. These peer-to-peer transfer of funds across border have enormous economic significance for many of the countries that receive them. So much so that the World Bank and the Gates Foundation have set up complex tracking mechanisms that estimates the remittances of developing countries amounted to $529 billion in 2018, up 9.6% from the previous record high, that is $486 billion, which is recorded in the 2017. So this is about the major, the three different services which are provided by the commercial banks. So almost we have discussed the 15 financial commercial bank services. So hope you all understand about online banking, private banking and mobile banking. Thank you for your listening.